Welcome to my first video blog of 2013, a year I think and hope is going to be quite an exciting one. One of my favourite expressions is never look back, but I think it would be in order just to have a brief overview of what happened in 2012 that'll give us a flavour of what I think could happen in 2013. The London market in general had a pretty good year. There was plenty of distraction, the Olympics, the Jubilee, and I'm not sure I can call either of them clouds, but if they were clouds, then the silver lining was that London looked at its magnificent best, attracting admiring glances from all parts of the world. London retained its position as property capital of the world, in spite of the tax uncertainties that the government seemed to put in the way. These uncertainties meant that the top end of the market, which I would characterise at over 2 million, literally shut up shop in the last quarter of the year. Below 2 million, however, there was strong demand, and with people wanting to come into London and invest in London, the market there had a good end to year, even taking into account the boring issues of getting finance still. So what's going to happen in 2013? Well, I think it's been a good start to the year, a very busy start to the year, and dare I say it, there seems to be more volume in the market. This increase in supply, coupled with the success of the relatively new funding for lending, I think gives hope for what I would characterise as normal London buyers, people who need mortgages. I've heard of some very innovative lending solutions in the last couple of weeks. I think that'll bring hope to first-time buyers in the coming months. Now that the government has at last provided clarity on their tax plans for wealthy buyers in London, we've seen a substantial increase in the number of keen, ready, willing and able buyers at above 2 million and sometimes well above 2 million come into the market. They now know where they stand, and therefore they literally see the 7% stamp duty, which is still fairly onerous, as a cost of purchase in London. And if they want to buy in London, and plenty still do, that's simply how much it's going to cost them. So they've got to get used to it, and they seem to have got used to it. Certainly the first 2 weeks of the year have brought much more positivity than we saw in the final third of last year to this area of the market. So the outlook for the rest of 2013. Let's not kid ourselves. All in the garden is not rosy. However, as an optimist, I do see signs of the world seeming to improve. The stock market has had its best start to any year since 1999. It appears to me there's broadly positive sentiments in markets in general. Whilst we won't see substantial increase in prices in 2013, I think we'll see roughly a 5% increase in prices throughout the year, with an increase in volumes. Perhaps unsurprisingly, the buy-to-let market is in full swing, with investors piling into the market. They have been doing so for the last 2.5 to 3 years. Lettings is therefore a strong market, and prices rose substantially from 2009 onwards. Towards the end of last year, this in central London came to a little bit of a halt, with prices flattening out certainly in the last half of the year. In our southern region, Battersea, Balham, Clapham and Barnes, the volume of property available has not kept pace with demand, and there is enormous demand, and therefore prices in those parts of London have continued to rise throughout last year and indeed into this year. My advice therefore for buy-to-let investors this year is to look slightly further afield, as the demand in the outlying areas of central London is extremely strong. As a final point, and I think a very positive one, the launch of the new flats in Battersea Power Station was a massive success, with 80% selling in the first 5 days of launch. This shows that the immense strength of the London property market remains intact.